Good afternoon, everyone. A very warm welcome to all the participants joining us today for the webinar on overview of FEMA, regulatory framework and compliance perspective. I am Tej Soni and it is my pleasure to be today's webinar moderator. On behalf of the organizer, CA Dr. Raj Chawla, I extend heartfelt welcome to all the participants. We truly appreciate your valuable time for this knowledge sharing session. May I now request CA Dr. Raj Chawla to kindly deliver the welcome address and formally introduce the speaker.
Thank you, Hitesh. Good afternoon, everyone. First of all, I welcome our guest speaker, CA Niranjan Srivastav ji, and all the participants joined for this webinar on overview of FEMA, regulatory framework and compliance perspective. Our guest faculty will discuss objects and scope of FEMA, residential status under FEMA, capital versus current account transactions, role of RBI and authorized dealers, AD banker, FDI, ODI, ECB, and cross-border remittance overview, reporting, documentation, and compliance timeline, contraventions, penalty, and compounding under FEMA. So these all things will be discussed by our guest speaker with all of you, and even you want some other clarification, other things, you can directly uh, discuss on this Zoom meeting, because this our connection is that everybody can speak. But my request that till my speaker is speaking, giving his deliberation, till then we should be silent, and after that you can join directly to interact with the speaker, or you can write your queries in the chat box given below. After his deliberation, he will take up all your queries even after completing this webinar. So with this, once again, I welcome all of you, and now I request Mr. Hitesh to brief read down the profile of our guest speaker.
We are privileged to have with us CA Niranjan Kumar Srivastav, a well-regarded professional with over 17 years of rich experience in domestic and international taxation, FEMA, and management consultancy. He has completed several prestigious post-qualification of ICI, including Diploma in International Taxation, Certificate on FEMA, along with certification in forensic accounting and concurrent audit. He has handled diverse assignments in advisory, litigation, and regulatory compliance. With the brief introduction, I now invite our esteemed speaker to kindly take over the session forward. Thank you, and over to you, sir.
Thank you, Hitesh. Thank you for your good introduction. First of all, I would like to thank you, CA Raj Chawla, sir, for the organizing and giving me this opportunity to present before all the participants. And now I am sharing my screen and PPT so that everyone can see. Please confirm you are able to see my PPT.
Yes,
Is
sir.
PPT is visible?
Yes, sir, it is visible.
Okay. So warm welcome to all the participants. Today we will discuss about the FEMA scope, compliance, their regulatory frameworks, and other related terms. So why FEMA is the very uh, significant topic nowadays for the Indian chartered accountant practicing in the country. So if we'll talk about the FEMA, we can link with the directly FDI. Whenever we will talk about the economy, we look forward that how FDI is coming in India and economy is growing day by day. So all the things we will discuss one by one. We will starting from the year. So what is the objective and scope of the FEMA? So first of all, regulates foreign exchange transactions in India, facilitation external trade and payment, conserving of foreign exchange, ensure orderly development of foreign exchange market. These all are the objective for the FEMA. So why it is required? Because all over the cross-border transactions, it happens in the uh, foreign currencies. So we need to monitor and conserve this kind of things. Now, however, the government of India has authorized even the INR to transact the INR has been approved by the Indian government for the transacting in even the cross-border transactions. But even if we will look forward, the overall the global transactions, the foreign currency is the leading currency. So we need to preserve and regulate the foreign exchange. What is the scope of the FEMA? FEMA is applied to the whole of India. All branches, offices, and agencies outside India, which is controlled by the person resident in India. So even if there any branches or their businesses has been set up outside India and operated and controlled by the person resident in India, the FEMA is also equally applicable to that branches overseas there also. Export and import currency, regulation and compliance framework, enforcement and adjudication. So, if any contravention has been conducted according to the FEMA Act, so enforcement and adjudication will also be follow up. So, if any branches even doing the any contravention outside the country, their FEMA enforcement and education will equally applicable. What is the key regulatory framework? If we talk about the FEMA, not only FEMA Act 1999 passed by the Parliament is the sufficient to refer all the things. So, apart from the FEMA Act 1999, Foreign Exchange Management Regulations issued by the RBI, Foreign Exchange Management Rules issued by the central government, Master Directions, Master Circulars, Notifications, Circulars, and FAQ, frequently asked question, released by the RBI time to time. These all are the key regulatory framework. So if we going for the any transactions or we wanted to decide any uh, if you wanted to decide any transactions, what kind of policy will be applicable and what we should keep in the mind. So we need to go through all the things. First, we refer to the act, after that regulations, rules. Then, if any updated circulars has been issued by the RBI or any clarification has been issued through the FAQ, then we have to go through all the things. Then we, on that basis, we can also decide what kind of procedure we should follow. Why FEMA matter for the chartered accountants? So this is the, as I said earlier, the all lots of FDI is coming. Indian economy is growing, fastest growing economy in the world. So everybody sitting outside the India, their eyes is on the Indian economy. So cross-border transactions is increasing significantly. Untapped market potentials. So few professionals in the markets who are providing this kind of services. So lots of opportunity for the professionals. Very few consultants and specialists available at present. Huge demand for professional. Definitely, if transactions is increasing day by day, accordingly, professional demand will be increased simultaneously. Certification by CS. So lots of transactions require the certification by the chartered accountant. So there is also lots of opportunity for the chartered accountants for the certification purposes. Lack of in-depth knowledge on the subject. So this is the main things because if you want to uh, make your full command over the FEMA, so you have to be very regularly updated through the master directions, FAQs, and any regulations which is revised by the RBI. So all the things is the important. So basically, professionals are not interacting day by day and not doing the practice. So they normally have lack of the depth knowledge. Increased statutory, increased scrutiny by the RBI and AD Bank. So earlier, what practice has gone, normally very few updates are came, and also whatever the filing has been made by the entity or professional, not as strictly scrutinized by the authority. But nowadays, even AD Bank or RBI is getting very hard and scrutinizing every documents the very strictly. Fear of unknown and ED. So, of course, anything if you are not know or you don't have the good command over the any topic, so it will be create fear. It's naturally. And ED name came whenever the our hearing. So it's a uh, like fearing in itself, because whenever the ED came, the situation and circumstances uh, gone the beyond. So if we will talk about if we are dealing with the any contravention of the other law, or if we are doing any crime, so normally a state police will deal with you or any other authority. But whenever you are contravening with the FEMA related work and any money laundering kind of things has happened, so directly ED will involve in these things. So ED name is also fearing lots of professionals, so they wanted to keep away from these topics. Statutory recognition and other opportunities under the FEMA. What is the other opportunities for our professionals who are practicing as a chartered accountant? So certification by chartered accountant, FDI, ODI, ECB, LRS, this all kind of forms we need to certified by the chartered accountants. Form 15 CSCB, it's a very regular practice, and I think many of you are also issuing the 15 CSCB on very frequent basis. So you all are familiar with these things. This is also opportunity. Net worth and financial certification. Valuation of the shares. So whenever the FDI is coming, our ODI is going outside India, so we need to take the valuations of the shares. So valuation certificates is also issued by the chartered accountants. This is also the opportunity. Advisory in respect of FEMA compliance, FLA return preparations, compounding and presentation before the RBI. So whenever the cases arises, you can also represent before the RBI on behalf of your client. So this is also an opportunity. So now we'll focus few the history of the FEMA, why it was required. So even foreign exchange conversation was required before the independence. Even foreign exchange control led by introduced by the Britishers in 1939. So first of all, they introduced the FERA provision in the 1939 to preserve, because that time also lots of transactions was made uh, in the cross-border transactions, and in the 39 the Second World War was started, so lots of up and downs was going on the economic, and that time the Britishers feel that foreign exchange reserve should be preserved and it should be monitored, so they introduced in the 1939. After post independence, proper FERA 1947 was enacted after the gained independence. So that time, India doesn't have the lots of experiences, but on the basis of the 1939 introduction by the Britishers, they form an act on the for the experiences and for the conservation of the foreign exchange. In the 1973, the FERA was revised, and updated version of the FERA 1947 was enacted on the basis of their experiences and the new challenges arising from the world. So on that experiences and the future challenges, they revised the FERA in the 1973 and introduced new FERA law. FERA 1973 came into effect from the 1st January 1974. Its main objective was to control, conserve, and regulate foreign exchange. ED administered at the law enforcement that time, first time in the FERA, because FERA was basically their objective was to regulate the act. And FERA introduced strict penalties and the criminal charges for the violations. So if any violations is made under the FEMA, it was directly considered as a criminal offenses. And even imprisonment, arrest was initiated by the ED. So as violation of FEMA was considered as criminal act and there were major penalties associated with it. So major penalty was also and lots of people were suffering under the FERA. On that strictness and their criminal act, after that in 1999 they realized that we should not give this kind of strict strictness to the people and they revised the FERA to FEMA. So that was the regulatory act, but now it's a management act. So now under the FEMA 1999, they shifted from the criminal act to the civil act. Lots of things has come under the civil acts, and they only provide the against the contravention only penalty provision instead of the imprisonment. So FEMA 99 replaced the FERA 1973 to regulate and manage the foreign exchange. So this is a bigger difference, regulation to management. So earlier was the regulation, what person is doing, if anything is in contravention, they strictly arrest them, and after that, heavy penalty on the person who make the contraventions, and even imprisonment was also followed by the adjudication. So under the under the FEMA 1999, this concept has been changed and gives most of the relaxation to the persons. Deals with transactions between person resident outside India and person resident in India. Current and capital account transactions, they divided broadly all the transactions between two parts. So either it will be current account transactions or it will be capital account transactions. They also given the two routes for their transactions. One is the automatic route and second is the approval route. So whatever that comes under the automatic route, you don't need to go for the RBI for any kind of approval and you can do your transactions through the ATM. And under the approval route, they have given some authority to the central government and some for some transactions to the RBI. Regulation, circulars, notification, and press note provided procedural aspects, monitored by the RBI and enforced by ED, as we already discussed about the ED. Non-compliance attract penalties. Just a minute, please. Oh. So non-compliance attract penalties. But if we compare with the FERA 1973, it is lesser and lots of even so it's a as compared to FERA, it's very lesser penalties and even most of the cases it's not a serious issues. So all the if you talk about the FEMA Act, so it's a very small act and only 49 section is there. All the 49 sections has been divided into the 7 parts. So first section 2 is the definition part. Section 3 to 9 is the basic concept of the regulation and management. Section 13 to 15, conservation and penalties. 16 to 35 is the education and appeal. Section 36 to 38 talks about the ED, and 39 to 49 it's a miscellaneous provision. So all the FEMA Act has been divided into 7 chapters and with the 49 section. So here is the some here is the some important sections which is given by the FEMA Act. Section 46 authorize and give power to the central government to make the rules. So central government is empowered under Section 46 to give the make the rules. 47 Section 47 give power to the RBI to make regulations and notifications. Section 48, these rules and regulations to be placed before Parliament. So even regulations issued by the RBI that will also lay down before the Parliament and will be approved. Even rules as notified by the central government, it will be also equally laid before the Parliament. Gets authority equivalent to the Act as it is passed by the Parliament. Regulations are to the instrument by which the power to make substantive law is exercised. So regulations and rules. Basically, if you talk about what is the difference between the regulations and rules, so regulations talks about what you can do and what you can't do. So that is the prescribed in the regulations. And rules prescribed if you can do, how you will do. So that rules is prescribed under there. So regulations are wider import. Scope must broader than the rules. So regulations has detailed prescription, detailed guidance, what you can do and what you cannot do. On that basis, only you can decide how you will do that is prescribed under the rule. Their revised it carries the same number as original, but will have R along with the year in which they are published. So whenever they publish the revised one, so they put it the R nominations. So accordingly, number will not be changed, but you can consider this is the revised one. Some major regulations notified under the FEMA. So permissible capital account transactions. One thing I would also like to clarify all the participants. Under the FEMA, whatever the prescribed thing, uh, what you can do directly, you can also do the indirectly. What you can't do directly, you cannot do the indirectly also. So whatever the prohibited under the FEMA, you cannot do or cannot do any planning through the our conduct or pass through the any indirect route. So this is the very clear things you have to keep in your mind. Whatever the prohibited under the FEMA, that is the prohibited, cannot be permissible under any circumstances. If you do, that will be covered under the contravention. Accordingly, that uh, contravention penalty and provision will be applicable. So, under FEMA regulation, some major regulations notified under the FEMA, like permissible capital account transactions. So, capital account transactions, if you will talk about the permissible, so under the current account transaction and capital account transaction, if you will see the definitions also, you can find out uh, current account transactions are the transactions which are freely be permissible unless otherwise it is restricted. And under the capital account transactions, all transactions are prohibited unless and otherwise it is permissible. So for the capital account transactions, it is not the permissible transaction. So government had notified some transactions which is permissible. So if you see the plain word, so capital account transactions is the prohibited transactions. We cannot do. But they have also given some list which kind of transactions we can do. And whatever the given in the list, that will come under the automatic route. So even you no need to go for the any permission. So permissible capital account transactions, they have also their regulations over there. Borrowing and lending in the rupees, deposit, acquisition and transfer of immovable properties outside India, realization, repatriation and surrender of foreign exchange, possession and retention of foreign currency, remittance of assets, non-debt rules, transfer of issue of security by person resident outside India, acquisition and transfer of immovable property in India. So this is the some major regulations has been issued by the RBI. FEMA rules, which is notified by the central government, is designed to consolidate and modify laws pertaining to foreign exchange. Under Section 46 of this Act, there is a provision granting to the central government to they have authority to formulate rules for the effective implementation of the Act and to ensure compliance with its provision. So, as empowered by the Section 46, central government has right to issue the rules. According to Article 13(3)(a) of the Constitution, the rules are considered to have the effect of law. So that is equally important and it's a part of the law. While rule outline the procedural aspect of law, they cannot contradict the act, although they can be modified. So always, whenever the contradiction will come from the act and rule, so always act will prevail and rule will not be prevail over the any section of the act, but accordingly that can be modified. Some of important rule notified under the FEMA Act, like current account transactions, compound proceeding, overseas investment, non-debt instrument rules. So these are the some important rules which is prescribed under the FEMA Act. Status of the person. So basically, if we will talk about the status of the person, so it is broadly divided between two parts: person resident in India and person resident outside India. Person resident in India, who is person residing in India, company which is incorporated in India. Person resident outside India are divided into three parts further: non-resident Indian, person overseas citizen of the India, and pure foreign citizen. So non-resident in India, it means person who is citizen of the India, but now they are residing outside India and they have become the resident of any country other than India. So that person covered under the non-resident Indian. Overseas citizen of India, that person or their parents or their grandparents belong from the India, but nowadays they have surrendered their citizenship of the India and now residing outside India. So that people are eligible to be considered under the overseas citizen of India. And third is the foreign citizens, purely foreign citizens. They are not even they or their parents or their grandparents is belongs to the Indian. So that is the pure citizen, pure foreign citizen. There is no root in the India. So who will be the considered as person resident in India? That is defined under section 2B. Person resident in India means a person residing in India for more than 182 days during the course of preceding financial year, but does not include. So if you will see this definition, it's like similar to the Income Tax Act. So a person who has gone out of India or who stay outside India, in either case, for our own taking up employment outside India or for carrying on outside India a business or vacation outside India, or C is the most important part of this definition. For any other purpose in such circumstances as would indicate his intention to stay outside India for an uncertain period. So this intention word is the very key word. And this is the deciding factor of the residential status of the any person. So if their intention is to stay outside India for uncertain period, he will become non-resident immediately. So under the, if you compare with the Income Tax Act, under the Income Tax Act, any person can be resident or non-resident for the India in a single financial year. But under the FEMA, even the under one financial year, one person can be resident for the some period and even for the non-resident for the some period. It means कि on a particular date he can be resident and on a particular date he can be non-resident even during the financial year, which is unlike the income tax act. A person who has come to or stay in India in either cases otherwise than for on taking up employment in India, or this is covering the person who is coming to India from the outside India. So a person who has come to or stay in India in either case, or on taking the employment in India, carrying on India as a business or vocation in India. It, even if you see in the C part also, their intention to stay in India for uncertain period. So this intention word is the critical word to deciding factor. So even if he came on the last day of the financial year and he has intention to stay for the uncertain period, he will become the resident. Any person or body corporate registered in India, an office branch or agency in India owned or controlled by the person resident outside India. So if any foreign company, their branch is India, that will be covered under the resident in India. Any office, branch or agency outside India owned or controlled by a person resident in India. So if any person who has also opened their branches, their offices outside India, that will be also considered under the person resident in India. And all the FEMA Act will be applied accordingly, even out of the India in the foreign country. Overseas citizen of India, when we are looking the earlier slide, person resident outside India, so that was divided into three parts. So who will be covered under the citizen, overseas citizen of the India? So overseas citizen of the India means an individual resident outside India who is registered as a overseas citizen of the India card holder under Section 7A of the Citizenship Act. So our Citizenship Act 1955, which allowed to become a overseas citizen of India for the any person who is the citizen of India or their parents or their grandparents was the citizen of India. Person who will be eligible, child or grandchild of citizen of India, minor child of a parent where the parent is a citizen of India, foreign spouse of India. Even that person has gone to outside India and they married there with the foreign national person. So that their spouse will also be eligible to register as a foreign citizen of India only after the completion of 2 years of the marriage. So here FEMA current account definitions has been given under the 2J. So current account transactions means transactions other than the capital account transactions. So what will be the capital account transactions? So we can see here the capital account transactions, which is not the current account transactions. Is it like that? It's not like that. So they have defined the capital account transactions, but in the current account transactions, transactions other than the capital account transactions and without prejudice to the generality of the foregoing such transactions include payment due to connections with the foreign trade, other current business services, and short-term banking and credit facilities in ordinary course of business. So whatever the day-to-day transactions is being going on, like export, import, or you are remitting the money to your spouse or even your relatives for their expenditure, so that all will be covered under the current account transactions. Payment due as interest on loan and as net income from investment. So if you, even you have borrowed the ECB from the outskirts South India, so there if you are paying the interest on that borrowing, that will also be considered under the current account transactions. Remittance for living expense of the parents, spouse, and children residing abroad. So if you are sending that money through the remittance under the LRS, that all will be covered under the current account transactions. Expense in connection with the foreign travel educations, like if you are going for the vacation, so that all are the cover under the current account definitions. Any person may sell our own draw foreign exchange to or from an authorized person. If such sale or withdrawal is a current account transaction. So, as I earlier said, current account transactions are freely permitted unless otherwise it is prohibited. So, all the transactions, if you are doing under the current account transactions, you can freely do that unless otherwise it will be prohibited. But you have to do all the transactions through the authorized persons. So, authorized person has been defined under Section 10 in the FEMA Act. Authorized person include the AD bank. They have some categories given AD1, AD2, AD3, and full-fledged money changer and also restricted money changer. So these all are the authorized person. Provided that central government may in public interest and in consultation with the Reserve Bank impose such reasonable restrictions for current account transactions. As I already said, all the transactions are permitted transactions under the current account unless otherwise it is prohibited. So some transactions are also prohibited under the current account. The list has been given under the schedule 1 and 2, and accordingly we have to check from there. So what is the capital account transactions? As earlier we have read out all the transactions. What is the current account transactions other than the capital account transactions? Because here capital account transactions has been defined. So capital account transactions means a transaction which alter the assets or liabilities, including contingent liabilities outside India of a person resident in India, or assets or liabilities in India of a person resident outside India. So any kind of transactions you are doing which is directly altering your assets and liabilities. So we all are the finance persons. We can easily understand what kind of transactions which is altering our asset and liability, which is directly affecting our the balance sheet portion. Definitely all will be covered here. So capital account transactions has defined in the section 6. The Reserve Bank may, in consultation with central government, specify and class or classes of capital account transactions not involving debt instrument which are permissible. So the limit up to which foreign exchange shall be admissible for such transactions, any condition which may be placed on such transactions. So RBI has authority to prescribe the rules. If any transactions will be permitted, what will be there the cap over the transaction limit, how much transactions they can do. So it's in consultation with the central government. RBI can frame the rules and regulations, and accordingly, that transactions will be covered under the automatic rule. So you no need to go for the any permission. Even that transaction is covered under the capital account transactions. Here we have given the some comparison between the current and capital transactions, which discussed we earlier. So you can go through it. So, what is the major role of the RBI and AD Bank? So, mainly RBI is the monitoring agency, nodal agency under the FEMA. They have the right to formulate the policy, issue the regulations, giving the authority and approving approval authority, supervision and oversight. They have to monitor what kind of transactions is going on in the day-to-day routine basis. If any contravention is going on, so they can supervise and monitor the transactions. Enforcement power. and delegation of power. So, under the delegation of power, RBI has delegated some of their power to the authorized dealer bank, and accordingly, authorized dealer bank is complying under the delegation of power of the RBI. So, execution of work done by the AD bank, whatever the FDI, ODI is going on or coming here. So, all the formalities and all the forms which is filed through the AD bank, all the reporting processes has been delegated to the AD bank. Opening and maintenance of bank account. Approval and certification, delegated authority. So whatever the form you file through the on the Flare portal through AD Bank, so they have the authority to certify and approve, and after that they have to report to the RBI. Monitoring and reporting. So they monitor whatever the person file their form and report to the RBI. This kind of work done by the AD Bank. Some sensitive provision has been given under the FEMA. Say by otherwise, that is given under the section 3. Say by otherwise provided in the act, rule or regulation made thereunder or with the general or special permission of the Reserve Bank. No person shall deal in or transfer any foreign exchange or foreign security to any person not being an authorized person. So as I said, authorized person definition has been given under section 10. RBI has power to give permit to allot as a authorized person, give license and give permission to act as authorized person. So any person who is dealing in the foreign exchange, they have to do all the transaction through an authorized person, not other than the any authorized person. Make any payment to or for credit of any person resident outside India in any manner. Receive otherwise through an authorized person any payment by order or on behalf of any person resident outside India in any manner. For their explanation, they have given here. For the purpose of this clause, where any person in our resident in India receive any payment by order or on behalf of any person resident outside India through any other person, including an authorized person, without a corresponding inward remittance from any place outside India, then such person shall be deemed to have received such payment otherwise than the through an authorized person. So, if any transactions you are doing uh, other than through the legal channel or banking channel, or you are taking any money or giving any foreign exchange money to the any person without involving the legal channel through banking channel or without involving the authorized person, that will be covered under the contravention of this act, and that will not be treated as transactions made through the authorized person. That here last line is explaining that shall be deemed to have received such payment other than through an authorized person. So this we have to keep in mind. Whatever the transactions we are making uh, for the foreign exchange, it all should be transacted through the authorized person. Enter into any financial transaction in India as considered for our any association with acquisition or creation or transfer of a right to acquire any asset outside India by a person. They have also clarify and give an explanation. For this purpose of this clause, financial transactions mean making any payment to or for the credit of any person or receiving any payment for by order or on behalf of any person, our drawing issuing or negotiating by any bill of exchange or promissory note, our transferring any security, our acknowledge as a debt. So even you are issuing or dealing in the any traveler's check, you are issuing any security outside India or any kind of transactions which are covered under the financial transactions, that all should be that all must be transacted through the authorized person. So holding of foreign exchange, how much amount you can hold or you can't hold, they have given under the section 4. So that section start from save as otherwise provided in the Act. No person resident in India shall acquire, hold, own, possess, or transfer any foreign exchange, foreign security, or any immovable property situated outside India. So Section 4 is strictly prohibited because this kind of transactions will be covered under the capital account transactions. So this section is strictly prohibited for the any person resident in India will acquire, hold, own, possess, or transfer any foreign exchange, foreign security, or any immovable property situated outside India. But they have given some permission apart from the section 4. So you will see ahead. Realization and repatriation of foreign exchange, they have defined under section 8. Any amount of foreign exchange is due or has accrued to any person resident in India. Such persons shall take all reasonable steps to realize and repatriate to India such foreign exchange within such period and in such manner as may be specified by Reserve Bank. So that all the time limit has been prescribed by the RBI, even for the regular transactions, import and export, they have also defined. So within that prescribed period, you have to bring all the foreign exchange to India, repatriate to the India, and surrender that foreign exchange to the authorized dealer. So So what is the foreign exchange? They have defined under the section 2N. Foreign exchange, foreign exchange means foreign currency and include payable in any foreign currency, deposit, credit, and balances payable in any foreign currency. So it's include check, draft, even credit card, and all the kind of transactions, travel checks. So all will be covered under the foreign currency, whatever the mode they have given. Draft traveler checks, letter of credit, or bill of exchange expressed or drawn in Indian currency but payable in the foreign currency. Our draft foreign exchange check letter of credit, which has been uh, created outside India but payable in the Indian currency. So whatever the cross transactions in the cross currency transactions we are doing, that all will be covered under the foreign exchange definitions. Foreign security, they have defined that will include the share, stock, bond, debenture, or any other instrument dominated or expressed in the foreign currency and include securities expressed in foreign currency, but where redemption or any form of the return, such as interest or dividend, is payable in the Indian currency. So whatever the any person has invested through the ODI or even FPI, that all will be considered here the as a foreign security. And all the interest and dividend which is arising out of the that investment, that will be payable in the Indian currency after remittance, after bringing that money through the remittance in India. Repatriate to India definition. So what is the repatriation? So bringing the selling of such foreign exchange to an authorized person in India in the exchange of rupees, or the holding of realized amount in an account with a authorized person in India to the extent notified by the Reserve Bank. So first of all, repatriation, you have to bring all the money in the India, all the foreign currency which is earned or arises from the outside India. First, you have to bring here. Then you have to surrender that foreign exchange to the authorized person, or if you have right, you are maintaining some foreign exchange account here in India, you can also keep there, subject to some rules and regulations. Item cover those export earner foreign exchange currency EFC account or resident foreign currency RFC account, that all will be covered under the repatriate to the India, even it was not converted in the INR. If you have keep their money in the foreign currency under this RFC or EEFC account, that all will be considered under the repatriation to the India. So, permissible current account transactions. So all the, as we earlier said, all the current account transactions are permissible unless otherwise it is prohibited. So where is the prohibited? So they have given the schedule 1. Under the schedule 1, they have prescribed some transactions that is prohibited under the schedule. Schedule 2, restricted list with central government permission. So under the schedule 2, they have prescribed some of the transactions where central government approval is required. So before you are going involving in that transactions, you have to take the permission from central government. Schedule 3, list with limits. So in the schedule 3, they have prescribed some limits, and accordingly, you have to follow that things. Apart from these three schedules and all the transactions as prescribed, all the transactions are freely permissible and covered under the automatic route. Maintenance of close relative to be as per LRS limit. So nowadays, I think you will be familiar about the LRS limit. That is the $250,000 USD every financial year. You can repatriate from India to outside India. So there is no any approval, there is no any reason you have to explain, and you can repatriate that amount. That under the LRS scheme. That is called liberalized remittance scheme. Gift from resident to non-resident to be as per LRS limit. So whatever the, if you are going giving the even gift item, or you are spending in the your vacation trip, or if you are wanted to send that money to your any relatives who are residing there for the education purpose or for any other purposes, so that all will be covered under the LRS. So limit is the 250,000 USD every year. Medical expense and educational expense, that is also covered under the LRS scheme, but they have given some flexibility. So if medical expense estimated by the lakh USD, that will be also covered under the permissible transactions. You also only need to show the estimate given by the foreign hospitals. So accordingly, the AD bank will be allowed to transfer and remit that fund, even that limit is exceeding the 250 lakhs USD. Consultancy fees not exceeding USD 10 lakhs per project. That is basically given under the infra projects, and you can see this consultancy fees is covered under the schedule 3. So that is some limits given here. Here is the capital account transactions. They have given schedule 2 schedule. So in the first schedule, they have given the permissible capital account transactions for the person resident in India. So as we earlier said, capital account transactions is the prohibited transactions unless otherwise it is permitted. So they have given some permission for the resident in India. So here the most important transactions is given. Investment in foreign security. You can invest in the any foreign security which are listed in the foreign nation security exchange board. Foreign currency loan raised in India and abroad. Even you can raise the ECB subject to the ECB provisions. Transactions of immovable property outside India. As earlier we have seen that is prohibited, but here he has given the permission transfer of immovable property outside India. Guarantee issued in favor of person resident outside India. Loan and overdraft from a person resident outside India, that is covered under the borrowing. Maintenance of foreign currency account. You can also, as a person resident in India, you can maintain the foreign currency account subject to some conditions. And insurance policy outside India, if you are looking for the insurance policy and the foreign insurance policy holder company is issuing the cheaper insurance policy for you, you can opt for that also. That is the permissible capital account transactions. Under the Schedule 2, they have given some permission for the person resident outside India. So person resident outside India can also do some capital account transactions in India. They can invest in India, issue of security by a company entity in India. We normally call this as a FDI. Investment in India, capital in firm and LLP, that is also covered under FDI. Acquisition and transfer of immovable property in India. So that is having given some restrictions here. They have some restrictions there like infra project or in the real estate. You cannot do these things, but other than that, you can do. Guarantee in favor of resident in India. Uh, Even any person resident outside India can also give the guarantee for the resident in India. Deposit with resident in India, foreign currency account in India, and remittance outside India of capital asset in India. So these kind of capital account transactions which are permitted for the person resident outside India. Action to be taken by the person going outside India. If any person who is going to outside India and their intention is to stay for the uncertain period of the India, and they are going for the employment or business purposes, so their intention should be very clear. If you are going to outside India and they don't have a plan to come immediately to the India, they should take some actions before going to there. Intimate to their bank for changing their account from saving account to NRO or NRE account. Companies where shares held for changing the status. Other investment where mutual funds, etc., they have invested, because that will impact the other statutory limits, etc. If you have the bank account, they will change from saving to NRE, NRO account. So accordingly, the TDS liability over the interest will be affected. Companies where you are employed as a employee, so accordingly their tax deduction and tax liability will be decided. You have made some investment, etc. So accordingly they will deduct the TDS. So making the statutory compliance regularly and smoothly, you should inform this kind of things before going to the India. Type of bank account for the non-residents. So following type of bank account that can be maintained by the non-resident in India, that is called non-resident external account, that we called NRE account, non-resident ordinary account, that is normally we say NRO account, foreign currency, non-resident account, FCNR, we normally say a special non-resident rupees account. So out of four, three are the rupees account, NRE and RO, both are the maintained in the INR. SNRR, that is also the INR account, and foreign currency non-resident account is the only foreign currency account. Interest on NRE or FCNR account is exempt from the income tax. NRE and FCNR balance are freely repatriable. So whatever the balance has been kept under this account, NRE and FCR, they can freely transfer from that account to their outside India. There is no restriction over there. Balance in NRO can be remitted under 1 million scheme. So whatever the amount has been kept under the NRO account, only 1 million USD in a financial year, you can repatriate from, uh, you can remit from India to outside India. So that is the limitation over the NRO account. Acquisition of property in India. So NRE POI allowed to acquire the property in India. Agriculture plantation farm house not allowed, and foreign spouse of the NRI PIO can become joint owner only after the 2 year, as we already discussed earlier. NRI PIO can inherit agriculture property from a resident. So any agriculture property has uh, come through the inherit that can also be retained by the NRI POI, can sell existing agriculture property only to the resident, and resident can gift property to the NRI OCI also, but restriction is other than the agriculture land. NRI can gift any property to the resident. There is no restriction over the NRI to resident. So now we move forward to the FDI. So what is the key point under the FDI? We have to keep in mind this is a very popular nowadays, and lots of investment is coming from outside India to India. So first we decide the eligible entity where investment can be made. Mode of remittance, what kind of mode should be there? So only the legal channel and banking channel will be the mode. Sectoral cap. So lots of sectors, which sector you are going to invest. If the government can given any sectoral cap like 49%, 74% or 100%. So that we have to keep in mind. Type of instrument for investment, through which investment you are going to through equity or convertible form of the equity. Valuation norms, we have to take the valuation from the registered valuable. Time limit for the compliances whenever the investment is coming. So what will be the compliance time period? We have to adhere with that process and compliance. So this is the key point we have to keep in mind. What is the FDI process? Filing of form to the RBI is online outside RBI filing portal. Uh, Entity user and business user need to create on the RBI form portal. First, we have to create your ID. Address of the website is also given, forms.rbi.org.in. On that, you have to create the ID, and accordingly, you can file the form. So RBI has launched new filing, single master form, where all type of information can be filled under one tab, which include FCGPR, FCTRS. FCGPR is filed whenever the investment come under the FDI. The shares and equity will be transferred. In that case, TRS is applicable. LLP1 and LLP2, it's applicable for the uh, LLP entities in which the FDI is coming, and accordingly, all formats you have to comply with that. It takes 1 day to accept the login and credential. It's take 24 hours. Basically, whenever you are, if you are the new user, if you are creating the new ID, then first we'll create. It will be confirmed by the RBI over the email within 24 hours. On the remittance from investor KYC form, remittance, that all kind of the formality you have to take. Shares or instrument are required to be allotted within the 60 days. So whatever the fund is coming from the outside India to within India under the FDI, you have to must issue all the shares within 60 days after receiving the fund. Which is the eligible entity where you have to make the investment under the FDI. So companies registered under the Companies Act, LLP under certain circumstances. Mode of remittance by inward remittance through banking channel, only legal route. There are two routes has been given, automatic route and approval route. So whatever the comes under the automatic route, you no need to go for RBI, any kind of approval, and you can transact, you can make all the transactions through the AT bank only. And whatever the comes under the approval route, you have to go for the RBI first approval, and then you have to go to the AD bank for the formalities. Type of instrument. So equity share, compulsory convertible preference share, and compulsory convertible debenture. So whatever the case has been given, you have to consider only the equity share. Even it is the preference share, it must be the compulsory convertible, or even the debenture, it must be the compulsory convertible. Otherwise, any debt or other instrument will not be recognized under the FDI. Some provided sector has been prescribed by the government. That some list is given here, like lottery business, including government, private lottery, gambling and betting, trading and transfer, development right, TTR, manufacturing of cigarette, cigars, and cigarette, tobacco, etc. Nidhi company, real estate business, and construction of the farmhouse. Sector not open to private sector investment, like atomic energy, railway operations, these kind of things, which are not open for the private purposes. So that cannot be comes under the FDI. Real estate business shall not include the development and township of the construction. So their criteria is given under the real estate. So accordingly, you have to check and decide. So FDI valuation norms. So what if any existing company which is issuing the share to the any foreign investor, they have to follow the pricing guideline. So pricing guideline provided in the master directions for an investment in India. The price of the equity instrument should not be less than the price worked out with the SEBI guideline in case of the listed companies. Valuation of the equity instrument done as per internationally accepted pricing methodology. So internationally accepted pricing methodology, if you see, so the mostly it is use the discounting cash flow method. So DCF is the most popular and implemented valuation policy worldwide. On the armless basis, duly certified by the CA, our SEBI merchant bank. However, if you look the SEBI notifications has been come out the last month, so they have excluded the merchant bank from the valuation list, and now the practicing CAs and cost accountant are the only authorized for the valuation purposes. So this is the also one new area which has given the broader scope for the CS. For example, if you value share of the 100 per share, the company cannot allot the any share 100 or above. So here is some forms given. FCGPRL, when it will be filed, FCTRS, when it will be filed, LLP1, LLP2. So this is for the explanation purposes. So now we will move forward on the ODI. So what is the ODI? It's just opposite of the FDI. FDI, whatever the funds is coming from outside India to the India. Similarly, under the ODI, the funds move from outside India to outside India. So acquisition of any unlisted equity capital or subscription as a part of the memorandum of the association of the foreign entity, our investment in 10% or more of the paid up equity capital of a listed foreign entity, our investment of control. So this word is also very important. The control, investment with control, where investment is less than 10% of the paid up equity capital of the listed foreign entity. So control comes under the if any person has the right to appoint the more than 50% of the directors, or who have the control even directly or indirectly. So that will cover under here under the ODI. If any investment if you are making in the listed company, that should not be less than the 10%. It should be the more than 10%. That will be covered under the ODI. Otherwise, it will be covered under the FPI, foreign portfolio investment. Even if you are investing in the non-listed company that is lesser than the 10%, that will also consider under the ODI. And If you are making the investment more than 10%, and after some time it will reduce the your shareholding from the 10% to less than 10%. In that case also your ODI tag will be continued, and that will be also considered as a ODI even after the reduction of the 10% of the control after the investment. So that explanation is given. Once an investment in the foreign entity is classified as ODI, the investment shall continue to be treated as ODI even if such investment fall below the 10% of the paid-up capital. For investment in subsidiary, joint venture, association, financial commitment include pledge, guarantee, etc. Banned investment in the certain sector like retail, like real estate, all entities except proprietorship firm can invest. So these all are covered under the overseas investment. Even you are trying, you are investing through your subsidiary, 100% control over the company, or even you are making through the joint venture your investment, all will be covered under the ODI. That is also divided under the automatic and approval route. So how much you can invest as a overseas investment, which cover under the ODI? So they have given the prescribed conditions here. So up to 400% of the net worth as per the latest audited value, audited financial statement, which is not older than the 18 months. So even if you are investing and initiating the investment in the month of May or June, on this period, the current balance sheet, which is closing on the March, has not yet been finalized. You can even use the previous year balance sheet also. So that balance sheet will not be, should be older than the 18 months. And according to that audited balance sheet, you can invest 400% of up to the net worth of the that balance sheet. Net worth include share capital, reserve created out of, so that is also net worth prescribed under the Companies Act. So accordingly, we can calculate. Overseas investment condition, what should be the condition where you are investing? So cannot invest in the country which are under the corporate, under the cooperative mode as per FATF. So FATF is the Financial Action Task Force. Financial Action Task Force, which is the monitoring agency, which has to keep eye on the every country and monitoring what they are doing by using the investment fund or they're the loan fund. So if that country comes under the gray list or black list, so you cannot invest in that country. So whenever you are planning, we have to first check over the FATF website that countries comes under the gray or black list or it's under the green list. To be verified, same as for FATF, NOC required from the relevant agency if the Indian entities has an account appearing as an NPA classified as willful defaulter by any bank under investigation of any investigation agency. So if any kind of things is going on your entity, so you have to take the NOC from that entity. Like uh, if income tax cases, scrutiny cases is going on in the company, then you have to take the NOC from the income tax department. If you have defaulted in any repayment of the any bank, so then you have to take the NOC from bank before remitting the fund for the ODI purposes. In case NOC not received within the 60 days from application, it will be deemed as NOC has been granted. So this is the advantage. If any agency is not responding within the time limit, then it will be deemed as a approved NOC within this after 16 days of the applying for the NOC certificate. CR certificate to be received within the 6 month and submitted to the AD bank within this period. So in any company or any entity you are investing outside India, you have to bring the share certificate within the 6 months and that will be submitted to the AD bank, and through AD bank it will be reported to the RBI. In case of liquidation of ODI, fund to be remitted back. So if any entity where you have invested that is bound up and that is liquidated, then you have to bring back all the funds from the that entity. So what is the process? So once you will file your application with AD Bank, so they will allot you a UI number, unique identification number, before remitting the fund. And after that, all the transactions which will be uh, made under the this UIN number. So that will be for the keeping the eye on the all transactions, whatever the transactions has been made under this UIN. File ODI form with AD Bank. Schedule E of the ODI form is to be certified by the statutory auditor. Check FATF, as earlier we have said, that website address is also given, fatf.gafi.org. FATF lists out those countries or justification which are not compliant. The bank approval, ODI form, and then permit the remittance. Form 82 to be filed. All the remittance through one branches of the AD Bank. So you have to maintain your all the accounts related to the ODI in a single branch of the any of the AD Bank. You cannot divert the multiple branch your transactions because that will make difficult for the tracking the payment, and that is not the permissible. Overseas investment compliance. What will be the compliance? What if you have made the ODI investment outside India? Every year you have to file the APR, annual performance report, and their due date is the December 31st every year. In case of multiple investment from India, highest investor will be filed. In case of equal, to be filed jointly. If you have made the jointly, then highest person which have the make investment, they can file only. You can designate to them. Accordingly, it will be considered. APR is required to be certified by the statutory auditor. APR contains detail of the foreign entity, share capital, net worth, profit and loss. Audited account of the foreign entity mandatorily if control exists, even though not required under host country. So that account must be audited, which you are attaching with the APR form. Even in that country where entity is formed, if even in that country, the account is not required to be audited under that country law, but for the filing of the APR, you have to take the audited financial statement. Control means authority to appoint director, direct policy, etc., which we discussed. It should be 10% or more holding, or you have authorized to appoint the more than 50% of the director. That all cover under the control. Investment by individual, that comes under the LRS scheme. We earlier discussed that USD 250,000 per financial year you are eligible to remit from the India to outside India. That is applicable to the resident only. Purpose of the resident, you can acquire the property abroad, acquiring share of the listed companies abroad, and opening bank account abroad. Disclosure of the foreign assets, signatories in the foreign bank account by the resident. So that disclosure you have to give to the AD Bank, and even under the Income Tax Act, if you are holding the any foreign assets, you have to also report in the ITR form. Non-disclosure, this attract the 10 lakh rupees per return per penalty under the Income Tax Act under the Black Money Act. So this is the consequences for non-reporting. This is the FLA return. You have to file the annually, whatever the FLA to be filed by all entities having either inbound or outbound investment. Either you have made the ODI or you have bring the FDI, you have to file the FLA return. Due date is the 15th July every year. FLA contains the following details. Section 1, basic information. Section 2, financial result of the Indian entity, like net worth, profit, sales, purchase, number of employees, financial liabilities they have given. So all the assets and liability detail will be reported through the FLA form. Now we are moving forward towards the liaison and branch project. So any foreign company can open the liaison office or branch office or project office in the India. So what is the liaison office? A place of business to act as a channel of communication between the principal place of business or head office. So through the liaison office, they can only open and create a liaison office after giving taking the permission from RBI. That is not the business place. This is the only presence as a communication channel. They can analyze the market, they can inform about that market conditions that is prospective and fruitful for their business or not. They cannot do any commercial activity through the license office. So does not undertake any commercial or trading industry activity, maintain itself out of inward remittance. So for the maintaining that license office, they have to bring the money from their head office. Permit to carry only permitted activity. So that all are other than the commercial and trading activities. Branch office, any establishment. Branch office, we all familiar that is the extension of the any head office of the organization. So branch office can be engaged in the any activity which are the engaged as per the parent entity. The parent entity is engaged in the any commercial transactions. Branch can also be engaged in that. So branch has to follow all the activities as prescribed as followed by their head office, their principal company, parent company. Project office, this is the temporary settlement, that is temporary setup only designated for the particular project which has been allotted to the foreign entity. So they can set up the project office in the India, but for all the things, liaison office, branch office, or project office, they have to take the permission from RBI. ECB, it's called external commercial borrowing. Whenever we borrow the fund from outside India, it's covered under the external commercial borrowing. So commercial loan raised by the eligible Indian resident entity from recognized non-resident entities. So this is the term eligible. You have to first check whether if any person wanted to borrow fund from the outside India, they are eligible or not. The first thing you have to decide. So what will be the purpose for the ECB? That meet the capital needs such as project finance, modernization, working capital. For this kind of purposes, they can borrow. ECB can be dominated in foreign currency and INR. So even in INR, they can also borrow from the outside India. That is the permitted by the RBI. Generally range of up to 1 year to up to 3 years. So non-capital goods, you can borrow for the 1 year, and for the capital goods, you can borrow for up to 3 years. Classified as capital account transactions under the section 6. So this is the permissible capital account transactions, which is given under the section 6 of the FEMA Act. So who is the eligible borrower? ECB eligibility, what would be? So all entities eligible to the receive FDI, Port Trust, unit in ACZ, SIDB, Exim Bank. So these entities can borrow the fund only in the foreign currency. But all over the entities which is listed here, that can borrow in the INR also. So there is only restriction for the 4 entities that can borrow in the foreign currency. So it means registered entities engaged in the microfinance activity, they cannot borrow in the foreign currency. And registered NPO company, registered societies, trust, cooperative, and non-government organization, NGOs, etc., they cannot borrow in the foreign currency. They can only borrow in the INR. So that is the restrictions. ECB eligibility, recognized lender. Lender should be resident of the FATF or LOCSO compliant countries, including on transfer of ECB. They cannot be part of the like North Korea, Iran, and Myanmar. So you have to check first which country you are going for the borrow. Multiple and regional financial institution where India is a member country will also be considered as recognized lender. So like World Bank or IMF, there India is the member country. So if they have prescribed all the countries, you can borrow from that country also. Foreign branches, subsidiaries of Indian bank are permitted to recognize lender only for the PCBs. So if any bank which has the foreign branches, like SBI has lots of foreign branches, you can also borrow from that Indian company subsidiary branches. Both borrower and lender must meet RBI eligibility norms for ECB to be valid and under the automatic and approval route. So under the automatic route, up to $750 million USD, it's a comes under the automatic route. More than $750 million, you have to take the approval from RBI. That is the eligibility criteria. Compounding under FEMA contravention is a breach of following provisions, rules, regulations, notification, order, directions, circular, and issued. So whatever the framework comes under the FEMA, if you are breaching any of these, it will be covered under the contraventions. So what is the compounding? Meaning of the word compound or compounding not defined under the act. So or any rules. Compounding refer to the process of voluntary admitting the contravention, pleading guilty and seeking redressal. So whenever you initiating from your side, you have found if you have made any mistakes and you wanted to correct it, so you can go for the compounding. It is a voluntary process in which individual or corporate seeks compounding for the admitted contravention. Sometimes banks, RBI also issued the LSF concept, so late submission fees for the compliance purposes for the filing of form. If you have made some mistakes and not filed the form within the time limit, then you can submit that form uh, with late fees submission. So LSF concept has introduced. Earlier it was not there. So any contravention, if you have arises, you have to go for the compounding. So LSF have given the lots of comfort to the persons. Benefit of compounding. So what is the benefit? It is a voluntary process, comfort of the citizens and corporate community. Personal hearing is not mandatory. Even you can request over the email and whatever the supportings and facts has is with you, you can share with the RBI. If they will consider physical hearing is required, only they will call. Otherwise, it will be resolved over the even email. There is no need to appear physically. Time bound disposal within 180 days, it will be disposed of. Changing dynamic of our economy, simple and hassle-free procedure. No proceeding for further proceeding initiated or continued. So once it will be closed, no other and further proceeding will be initiated. There is no concept of the here reassessment like absolutely transparent. So everything will be very in the transparent manner, and RBI officers are mostly very professional guys and they deal with the very professionalism. It saves times and energy, one application, one hearing, one order for one notification. What is the process? You have to file, pay the fees and submit the application. On the receipt of fees and application examined by examination of documents by RBI, calling for the additional documents if required, opportunity for the personal hearing, passing compounding order, payment of the compounding amount, and issuance of the certificate of payment of a compounding amount. So this is a very simple process and it's not a very difficult process. So this all from my side. And if anyone has any question, You can ask from me.
Uh, Satyendra Gupta has asked, can an NRI borrow money from a resident?
Pardon?
Hello?
Yeah, please tell me.
Uh, uh, Sir, can an NRI borrow money from a resident of India?
NRI, yes, they can borrow.
And can an NRI make domestic credit card payments from his NRO account?
Domestic
Credit card payments.
from NRO account.
हाँ जी सर.
Yes, they can. NRO account is basically from the Indian perspective, whatever the fund comes from their Indian source of income, that will deposited in the NRO account, and that can be used for the INR expenditure purposes also.
Sir, Puneet Zaro has asked, credit cards are allowed on foreign websites.
Can you repeat, please?
Sir, use of credit cards on foreign websites.
Foreign websites.
हाँ जी सर.
Yes, you can use the foreign website also. Whatever if you wanted to purchase for the any kind of transactions and wanted to make the payment, you can make the payment. There is not an issue.
And does the FEMA restrict investment in crypto? Crypto.
Crypto, no, no, crypto, you cannot do anything because crypto is not recognized by the government, and that is not legally permissible under the FEMA.
And can a company secure a unsecured loan from an Indian origin person in foreign currency?
So it will cover if you wanted to take any loan from the outside India, it will be covered under the ECB. So first you have to check the eligibility criteria. If any individual wanted to take the loan, they cannot take the loan. So only eligible entity can take the loan from the outside India. There even use of the ECB has also prescribed. So you have to check that what purposes you wanted to take the loan.
So can an Indian origin PIO holder gifts MF, FDs and financial assets to legal heirs who are also foreign citizens?
So if any person is a PIO, it means he has already dropped their citizenship of the Indian. So if that person is not the citizen of India and their assets in India, they can transfer to the resident person only.
Sir, is there any restriction under FEMA या RBI for Indian companies contracting for business purposes with a Chinese company?
So yes, they have given some restrictions. So whatever the country which is sharing the land border with the India, so for that country, is heavy investment is coming, you have to take the approval from the central government. So any country which their land border is sharing with the India. So China is also sharing the land border with India. So we have to take the permission from central government.
So Mr. Assis has asked, my client has incorporated company has invested paid up capital along with USL and invested in overseas foreign entity with controlling rights.
Okay.
Is
So
there
what is
any
the
problem
question?
with it? I've been filing APR on a yearly basis,
Okay.
but I don't think so. They have complied with 400% of the net worth requirements.
No, no. Actually, net worth requirement, whenever you are going for the investment purposes, whenever making
Hmm.
the ODI, that time you
Yeah.
have to check the 400% net worth.
At that point of time, also, that would not have been 4 times of the paid up capital and reserves.
So it's a more than 400% you have invested?
Yes, yes, yes.
Yeah. So that will be comes under the contravention. And
Okay.
then
That
you have
unsecured loan has been indirectly routed, basically.
indirectly rooted. Sir, as
That
I
is what
earlier
now.
said, whatever the not permitted directly under the FEMA, it's also not permitted under the indirectly. So for the ECB transactions, any kind of borrowing you are bringing from the outside India, you have to check the eligibility first, and secondly, their use also, in which criteria you are using.
If I am having a controlling right, let's say more than 10% of the equity in the foreign entity, basically that is a partnership joint venture.
Okay.
Do I need to comply with 400% requirement also?
Yes, yes,
That is
that also.
okay.
So
Okay,
controlling
sir.
right basically has been defined for the purpose of the ODI requirement. That will
Okay.
be covered under the ODI or FPI if you are investing outside India in the listed entities. If you have made
That is
the
not a listed. That is basically a private limited company incorporated out of India.
so if you are investing in the unlisted companies out of India,
Yes.
that will be considered under as a ODI transactions, and you have to check to the 400% of the ODI, whatever the net worth.
400 is the basic benchmark. I
That is the basic.
for
Yes.
investing every 4 rupees, I need to have my money of 1 rupee.
Yes. So whenever you are investing, you have to check from the last previous 18 months older your audited financial statement. So
Okay.
every
Okay.
time, whenever you are making the investment, you have to check from that latest.
Maximum is 4 times I can do.
Yes.
Right, sir. Right, sir. I got it. I
Yeah,
need to file yearly APR report, na?
Yes, APR and FLA.
But
Both you have to file
what
on
is
the annual basis.
what is the logic of filing a APR report when we are reporting the financials of that overseas investment?
So that logic, if you will see, they have to keep the track on the performance of the investment. So what kind of investment what you have investment, so what kind of return is coming, or even you are making the loss. So at the end of the day, even you will be able to bring the money back, whatever you have taken for the outside India is not. So they are maintaining on the regular basis. That is the
Is
basic.
there any time frame within which the repatriation of money or profits derived from that venture should come down?
Yes, that should
How
be
much?
bring within the 6 months, within 180 days.
No. What happened is, I do have a private limited company over here, which has invested in a private limited company out of India, let's say South Africa.
Okay.
Now, what happened is they have invested money, they waited for 2, 3 years for a commercial operations of that unit, and now they're just getting on a break-even point. It's been 6 years as of now. Do I
Okay.
need to report? Although I am filing APR also.
So that whatever the situation is developing there, you are already reporting through the APR.
Yes. That yearly
So there
reporting
is
has
no
been
need to
done.
file any further documents. APR and FLA, that is the both regular routine returns that you have to comply with that.
APR and
APR and FLA,
what is FLA? I have not.
foreign liability and assets, that is a file every year by the 15th of the July.
15th of the July. For
Yes.
that balance sheet of that other entity, outside India entity, that comes under FLA?
Yes, even you have made the ODI or FDI, both
Hmm.
entities, in the both cases, you have to file the FLA by the 15th of the,
Right,
on the
sir.
basis
Right.
of unaudited financial statement, and you can revise by the 30th September on the basis of your audited financial statement. That is the rule.
We can revise that ODI also.
Because if you are
APR.
filing the by the 15th, if you have already the audited financial statement by that date, there is no need to revise. But normally it's not finalized within by the July. So if you are providing all the information on the basis of unaudited, then you can revise on
No, we
the,
have been filing it based on the audited financials only.
then there is no need to revise.
Right, sir.
That's
Right.
all.
So nice of you. Thank you, sir.
Hello. My question, please.
Yeah, please, sir.
Yeah, you said even scrutiny assessment, if it is going on, you need some permission. These are very normal things, scrutiny assessment in coverage.
Yes, that is normal cases, but sir, Act has prescribed you have to take the NOC. Even if you are making the investment from India to outside India under the ODI,
Huh?
and if you have the major demand from the any department, so
No, scrutiny assessment going on. Still, demand has to crystallize or not crystallize. I don't
then
know.
you no need to, even if demand has not raised till date,
Yes. This is what I say.
Yeah, if demand was not raised till date, then you can go forward, and that is not required for the NOC. But if any
Uh-huh.
demand is raised, then you
Mhm.
have to take in the NOC.
And second,
Yeah.
regarding resident, X number of days, if you are in outside India,
Yes.
182 days or something, then
Yes.
you are NRI. But intention you said is important. If
Yes.
student is gone outside and he has no intention to stay there or be settled there, only 2 3 years study,
Yeah.
as per circular 45 of FEMA something,
Yeah.
he cannot be treated as NRI if he doesn't want to settle abroad. Throw some light on this.
So
Circular
actually, if
45
yeah, if any a student,
student.
yes, if any
Yeah,
student is going to outside India, then in that
yeah,
case, you no need to check the 182 days condition. If
yeah,
any student is going outside India, their intention to complete their education outside
yeah.
India, so
For
Not
definitely
to
some
they will
settle
reason,
there,
stay.
one
not
second.
to settle there.
For some reason, the Ringo app isn't coming up
Pardon?
and the machines are not working. Sorry? They've removed
What?
all the signs.
Yeah,
What is
Anurag.
this? What is this voice? I don't understand.
So if any student is going outside India, they have
Yeah,
clearly intention to stay there for 2 or 3 years.
yeah,
They will not come back within the month or within the uh, few days back.
yeah, yeah,
So whenever they leave India for the
mm,
outside India, he will become
yeah,
the non-resident immediately.
yeah. But intention is not to settle there. Then,
No, no,
as
it intention is not, the language says intention for stay there for the uncertain period, not settlement for there.
uh,
If their intention is to stay outside India for the uncertain period, means
mm,
if person is going for the any education purpose for the 2 year times, it might be
mm,
take the 2.5 years. They have
yeah,
some uncertainty.
yeah,
So if any long period, if person is going outside India or their intention have to stay there for the any uncertain period, that person will become the non-resident immediately.
no, no. Very clear question.
Yeah.
Student is there with the intention to complete study and come back,
Yes, sir.
even though the period of stay is beyond 182 days or 1 year. Intention is to study and come back. In
Yes.
that case, I think he is not, he continues to be resident as per FEMA,
No,
even
sir.
though income tax thing is separate.
See, income tax is totally separate.
Yeah, yeah.
But as per FEMA, he will become the non-resident
No, no,
immediately.
he will continue to be resident as per FEMA because his intention is to study
Logically,
and come back. Circular
Varsha
45.
Saab, logically, Mr.
Sir,
Chawla is
with due
correct.
respect, sir, with due respect, I am disagree with this point. A student who is leaving India for their education purposes and they have to intention to stay for the uncertain period for the 2 year or 3 year, so he will become the non-resident.
The object has been specifically stated as student, and he has taken basically visa for, as a student visa only.
Yeah, yeah,
Yes.
that's right.
Till the time
Student
he
visa.
retains the status as a student, he should
Yeah.
not be considered. Logically, he is correct.
This is what, as Circular 45 states this. And even if we have written to the bank and bank says, okay, it's we don't take him as resident or non-resident because intention is to study and come back.
Okay. So, but sir, in my
Thank,
opinion, I am disagree with this point with all due respect to all of you.
no problem. I'll
No
call
problem.
you. You take your time. Maybe tomorrow, day after.
Yeah, yeah,
Uh,
please. You can.
Circular 45.
Okay.
Thank you.
I do have one doubt. Just one. The case which I was discussing, basically, I wanted to know instead of unsecured loan, I have a creditor's liability
Okay.
that I have locally raised certain dues which is pending and remitted more than the paid up capital and reserves to forensics. Does it matters to me?
No, that doesn't
No.
matter.
Sure. Thank you. Thank you.
So there is one more question. Can an NRI use Indian credit card since this will be using Indian money for foreign expense without direct remittance?
If NRI possessing the Indian credit card, uh,
Yes, Mr. Niranjan. So my question is,
yeah,
I I am currently an NRI. I have I was prior to becoming an NRI, I was a resident Indian. I
okay.
still continue to hold a Indian passport.
Hmm.
During my residency in India, I was issued a few credit cards. Can I continue to use those credit cards for making foreign transactions outside India, knowing that these will eventually be converted to rupees by the credit card company and continue to pay in India? The question why I'm asking this is the reason I'm asking this is this essentially leads to remittance outside India without any checks and balances with respect to whether adequate taxes have been paid on these expenses which I'm routing through my Indian credit cards. Do you understand my question, sir?
Yes, yes, I understand. So in this case, definitely you have not informed to your bank to you have become the NRI. When if you will inform to your bank, the issuing bank who has issued the credit card, definitely you
The
will
bank is
stop the
informed. The bank is informed.
bank is informed already.
Yes. Yes.
So I think bank should take the action and stop this credit card as a non-resident of India. It's not permissible under the FEMA.
But banks do issue credit cards to NRI customers. There is no restriction from the banking side. It's a known fact in India. Even if I was to apply for a credit card in India by an Indian bank,
Hmm.
they are happy to issue me a credit card.
For the non-resident India.
Yes.
Is a foreign citizen who has come to India for this limited period, so they can take the benefit. But if you have become the non-resident and you are staying, your intention is also staying outside India for the uncertain period,
Yes.
then I have to check
Most of the
that.
banks issue credit cards to NRIs,
Hmm.
even today, fresh credit cards.
Hmm. So if your
So I
bank
don't
is
want to take up your
issuing,
time
then
right now.
there is no restriction over there, because if you are using the credit card, it's all comes under the legal channel and banking transactions. So all the banking transactions is permissible transactions. So whatever the FEMA prescribed, whatever you are making the money, remitting or bringing, so all should be through the only authorized person, and authorized person defined the uh, bank
Yeah,
and
so
fulfill.
I'll be paying all the credit card bills through the NRE bank account or the NRO bank account that I hold in India.
Yes.
And as long as I'm filing taxes in India,
Hmm.
all the due taxes that are payable in India, am I under contravention of any of the FEMA rules as such?
No. Your credit card payment is going from the NRE account or NRO account?
NRO account.
NRO account. Definitely no, because NRO account is the freely transactions for from the Indian income and expenditure. So definitely it is not a contravention under the FEMA.
Okay. And if the bill payment is coming through an NRE account, is it a contravention?
So actually, if you will see the difference between the NRO and NRE account, so NRO account is basically non-repatriable account, and NRE is the
Right.
repatriable account. So this
Right.
is the basic difference. Even if you are using for the payment of these things, there is not a restriction. NRE can also be used.
Okay. Thank you. This was really insightful session, Mr. Niranjan. Thank you so much for your time.
Thank you for your
Niranjan sir,
participation.
I have one question.
Yeah.
We can get companies incorporated in US through the Delaware mechanism. So the audit
Okay.
is not mandatory up to a very high threshold in US.
Yes.
So
Yes.
we have to file that APR.
Yeah.
But as you said that it has to be, audited by a statutory auditor. But that company won't have an statutory auditor in US. So should we be, auditing the company?
So this is the very practical challenges, and we all are facing these kind of things because lots of country has given the threshold limit very high, and there is no statutory requirement for the auditing in that host country. But
Hmm.
here, what FEMA says. So if you will see in the practical challenges, lots of banks are saying even a statutory auditor can verify and give the declaration. But the condition says that if any person, even a chartered accountant in the India, who
Hmm.
is certifying that balance sheet, that person should be eligible to do audit in that host country. So normally bank would ask for the statutory auditor, you can verify that unaudited balance sheet and you can attach with the APR. But that is also legally not valid. But there is no clear-cut answer for this problem.
Since the client is insisting that we can get this
Yeah,
certified
client
to
and even
us, so
bank is also insisting. Even
so
bank
should we
sometimes also suggest you can take the certification from your statutory auditor and then you can submit. But what rule says, if that person who is certifying that balance sheet, it should be
Hmm.
eligible to make the audit in that host country. So are we eligible to make any
uh,
audit in that country? We are not eligible.
hmm.
So that is the lacuna you can
Is
say.
it like a practical loophole? Because before us also there were
Yeah,
certain
yeah. This is the
practicing
practical
chartered
challenges,
accountants.
and all are
They
we
were
facing
they were
this.
certifying the balance sheets. They were
Yeah.
making the disclosures in the audit report, but they were submitting in through the APR. Bank has
So
never for 6 7 years they have not objected to it.
yes,
So should we? Hmm,
because bank only wanted to take the their comfort.
hmm,
They wanted to shift their burden to other person because if they will accept without certifying that
hmm,
balance sheet, RBI will raise the question. So for the making that clearance, they are
hmm,
shifting their burden to the us. But we as a professional, we have to check
hmm,
whether we are authorized to certify that balance sheet or
hmm,
not. So rule says if you are the eligible to certify or do the audit
hmm.
in that country, you can do here also. If you are
Okay.
not eligible, you can't do.
So one more question is, if we see the FEMA Overseas Investment Rules 2022,
Yes.
under Rule 19, there are certain restrictions which a company that has been incorporated to the overseas investment should not get into the restrictive fields. In that rule, sir, in Rule 19 specifically, there is a column that restrictions and prohibitions. It restricts dealing with financial products linked to Indian rupees. That means, I should not be making an ODI to a company which is dealing in financial products linked to Indian rupees. So, what actually does it mean? The practical point is, one of our client had got a company incorporated in US. So he took the shares and did an ODI for the investment. And now that company that is incorporated in US wants to get into financial products. They want to start these, for example, what we have in India, like small startup loans, small MSME kind of loans, small entity loans. They want to get into that business. Originally
Okay.
that company was not into that. It was an IT company, but they are making good profits and all those things. They want to
Good.
add this clause to their company. Is it permissible? Because they are not going to remit anything from India now. The company has enough surplus profits in US, and they are doing everything there. No more remittance is to be done. Is it still restricted because I'm not going to do any overseas investment now? An initial token was done, but that was around 3 to 4 years ago. Now the company is very independent, and they want to add this clause. Is it now permissible?
Dealing with financial product linked to the Indian rupees without
Indian
restriction
rupees. So
is
nothing is to go
acceptable.
from India now. The company
Hmm.
will run on on its own now in US.
So they are doing all the businesses in the US now, not in
Yes,
the India.
yeah. They are
Yeah,
based in
so
US.
that
They are
will
doing
not
IT
consider
business.
under the Indian rupees, no? Definitely, they are if they are transacting there, they will transact in the
Hmm.
USD, in the not
Yes,
Indian
they will do
rupees.
in. Yeah.
Yeah, so they can do it. That will not cover under here under the restrictions.
So this restriction is not applicable to us.
Not applicable for that because they are not dealing in the Indian rupees. That is basically given if you are diverting the form even after investing there, if you are
Hmm.
diverting in the Indian financial market. So that restriction
Okay.
is given for that.
Okay. And in the same clause, sir, there is one activity, real estate activity also, that is restricted. So
Yes.
can a company in which ODI is done, they can acquire
So,
immovable
as we
properties in?
already discussed in the our slide, so in the real estate field, every country has restrictions. But if you will look the real estate definition, there is very broad definitions of the real estate. So even the India FDI is coming, real estate is prohibited, but they have given the permission for the developing of the township, developing of the projects, etc. So they have lots of criteria given under the real estate. So you have to check the specific transactions which you wanted to do.
Okay. That company is not getting into real estate business. They want to acquire offices basically. They want to buy immovable properties in US for
For
the
doing
registered
their
office in.
businesses. That
Yeah,
is
it is not
permissible.
business. They are
That is
acquiring it,
permissible.
investing in a real estate basically.
Yeah,
So
that is permissible. Actually, that is not covered under the real estate business. They are acquiring
yeah, that
some
is.
immovable property for running the offices or
Hmm.
this kind of things. So that is the permissible. That is will not even the cover under the definition of the real estate.
Okay. Sir, one question is that is linked to transfer pricing also. When we do this TP audit,
Yeah.
suppose there is a company in which we are showing that the operating profit, the distributable profit in India is less. So in
Okay.
the TP audit, we basically qualify that point that this should have been the distribution. Suppose in India and UK. So the Indian entity has got lesser amount.
Okay.
It should have got more. So we qualify that. What is the repatriable amount?
Hmm.
So that company is basically not getting that from the holding company. It is not getting the share. We have audited it. We have shown that this is the lesser portion which should have been distributed to India but not received.
Matlab they
So
are
it is
not getting
already
their
qualified there.
fair
But does
share.
it have FEMA implications also? Because you said that anything that is due to an Indian company should be repatriated to India as soon as possible. But that holding company is not giving that share. They have not disputed it yet. There is no scrutiny matter going on. We have reported in an audit that this is below the TP study that we what percentage we calculated.
No, that will not cover under the FEMA because that party is not agree because this is your opinion and you have
Hmm.
decided arm's price as per Income Tax Act. And
Hmm.
as per Income Tax Act, you have two sections of the 92.
Hmm.
Accordingly, you have to decide the arm's price, what amount should be come to India if any
Hmm.
transactions is made. If that had not come, then they have also given some subsequent uh, um, consequences for that. If even
Hmm.
arm's price is not given, then they
Hmm.
have to, or the income tax authority will treat it as that amount has been borrowed to the other entities, and they will starting the calculating interest over there, and that interest income will be charged in your income.
Actually, we also do the stat audit for that company. Should we qualify the report based on that? There is a certain.
No,
Is it?
that should not be qualified because that is not the contravention of the any law.
Hmm.
If any pricing difference is there, your opinion is this price should be 10. Their
Hmm.
parent company is saying no, no, this amount should be the 8. So that is a
Hmm.
transactional issue, not the statutory any contravention. So on that basis, it should not be qualified as the statutory auditor report. It will also not cover under the FEMA. Once it will be decided that amount has been accepted by the parent and amount has been due, then your prescribed period under the FEMA, 180 days or 9 months or 15 months, that will be accounted.
Okay, sir. So one question I had already asked in the chat box also. There is a person of Indian origin. He is currently a British citizen now. He is basically an Indian, but settled in UK for a very long time. He has, he holds a lot of financial assets in India. Being, originally from India, he's a PIO holder also. So he wants to gift certain financial assets, mutual funds, FDs, lot of financial assets they have in India to their children. Now the children were also born in UK. They are, by birth they are British citizens now. So can he do the gifted because he's at a very ripe age? Is there a restriction that the children do have PIO, but by birth they are originally British citizens. So
So,
it's like a British
because,
citizen of an Indian origin
yeah,
gifting certain portion to a British citizen of an Indian origin. but they are legal,
So,
yes.
so actually there is restriction over the agricultural land. So agricultural
These
land
are
they
only
cannot.
financial assets.
That is
Financial
financial
assets
result.
only.
Yes, they can gift. There is not any restrictions.
Okay. Okay. Thank you so much, sir.
Okay. Most welcome, sir. Most welcome.
Thank you so
So
much.
anyone has any other question?
If no one has the question, we should conclude the session.
Okay. So now you can conclude.
Thank you, Mr. Niranjan Srivastav, for providing us such insightfuls in FEMA. And also, I would like to thank CA Dr. Raj Chawla for providing us this platform. Thank you.
Thank you, everyone. Thank you.